issues of the venture capital and private equity in Ghana. So before we go in, we want to do a quick introduction to see who is in the room. Then we can then start. So mics will come around. Name, your position, and the company you are representing.
Matthew Boadu Eje is my name. I work for Oasis Capital, and I'm also a director of Ghana Venture Capital Association. Thank you.
Thank you, Matthew.
Okay, so my name is Mariam Krize. So I work with the Funds Management Department of the Securities and Exchange Commission.
Thank you, Mariam. So if we put more microphones.
Hello, my name is Julius Lampter with Impact Investing Ghana. Thank you.
Thank you, Julius.
My name is Mami Tutuadat, and I work with Stafford Law.
Thank you, Mami.
Good morning. My name is Aziza Atta. I'm Senior Counsel with Stafford Law also.
Thank you.
Morning, everybody. My name is Jifa Megashi. I'm the Head of Investor Relations at CalBank, and I'm also a Director of Cosmos Innovation Center.
Thank you, Jifa.
Hello, good morning. My name is Charlene Obeng. I'm with ENS Africa. I'm an associate.
Thanks, Charlene. A warm welcome.
My name is Barbara Gansa, CEO of Zenari Capital.
Thanks, Barbara. Warm welcome to you.
Hello, good morning. My name is Kwabno Zusafo, Wangara Green Ventures Investment Management.
Thank
Hello, good
you.
morning. My name is Elvis Kwamponsa. I work with Yarrow Capital. I'm here for Benjamin Ajman. Yeah.
Thank you. Behind you.
Good morning, everyone. My name is Amelia Josiah. I work with Impact Investing Ghana. Thank you.
Thanks, Amelia.
Hi, everybody. My name is Michael Saki. I work for EY.
Thank you, Michael.
Hi, everyone. I'm Alate from Impact Investing Ghana.
Thank you, Amma.
Hi, good morning. Hannah Akwa from Ghana Venture Capital and Private Equity Association.
Welcome, Hannah.
Good morning, Mauli Ababu, Resurgence Capital Partners.
Okay. A warm welcome, Mauli.
Morning, everyone. Emmanuel Adekalo, Country Managing Partner for EY.
Thank you very much, Emmanuel. So a warm welcome to everyone. Once again, I think we have two more people to introduce themselves. Then.
Good morning, everyone. My name is Kwabena Boama. I'm with Stanbic Investment Management Services Limited, a pension fund manager.
Come, Kwabena. Thank you.
Good morning, everyone. My name is Percival Ofori Ampoma, Venture Capital Trust Fund.
You, Percival. So warm welcome to everyone. Thank you for the introductions. And those online, we are very happy to have you join us today. So this research report was commissioned by the Ghana Venture Capital Association and the Impact Investing Ghana. EY is a dissemination partner, so we are very happy to be working with you, collaborating with you on this program. On today's agenda, we will be taking opening remarks from Emmanuel, Amma, and Matthew. Then we will have a presentation on the report. We will have a panel discussion that will look at driving the future of venture capital and the private equity in Ghana, opportunities, challenges, and strategic pathways. So I'll quickly introduce Emmanuel to come and welcome all of us. So Emmanuel is an assurance partner as well as the country managing partner for EY Ghana. He has over 17 years of experience providing professional services to clients across different sectors, such as financial services, telecommunications, consumer products, and non-governmental organizations. His work experience spans many countries, including Ghana, United Kingdom, South Africa, Mauritius, Kenya, Sierra Leone, and Liberia, so a proper international man. He is a fellow of ACCA, UK, and a member of the Institute of Chartered Accountants, Ghana. Emmanuel also holds an MBA in finance and a BSc degree in accounting. Ladies and gentlemen, Emmanuel Adekalo, Country Managing Partner for EY Ghana. Hello.
working, right?
Hello? Hello? Okay, it's working.
Good morning, everyone. And good morning to our online audience as well. Those who can see me, but I cannot see. All right, so esteemed colleagues, honored guests, and dedicated professionals of the venture capital and private equity sectors, ladies and gentlemen, I'm delighted to welcome you to our premises for this significant dissemination workshop, where we'll be discussing the findings of the report on the state of venture capital and private equity in Ghana. The report is not just a collection of data and trends, but also a narrative of the journey, the challenges that the sector has faced, the milestones that have been achieved in the venture capital and private equity industry in Ghana. The report highlights several underlying issues that have shaped the industry. We've seen significant progress in some areas, such as job creation, sector diversification, yet we also recognize the hurdles that persist. The constraints in exit strategies, the imperative for stronger ESG policies, and the need for greater diversity are among the critical areas that require our concerted effort and attention. At EY Ghana, our vision and our goals align seamlessly with the growth and sustainability of the VC and PE sectors. And that's why you see we are active members of this process. We are committed to providing the industry with leading services that not only address the current needs, but also anticipate future challenges and opportunities. We offer a suite of services designed to navigate these challenges with precision and foresight. Our assurance, our tax, consulting, and strategy and transaction service lines are well positioned to support the industry's drive towards efficiency and sustainability. To this end, you see assurance teams providing robust financial audit and internal control attestations to support and ensure transparency and integrity, which are the cornerstone of investor confidence. Our forensic and integrity service offerings are tailored to combat fraud, enhance compliance, safeguard operations against risk that can undermine progress. Our financial accounting and advisory services team, who we call FAS, are adept at addressing complex challenges, offering training and support that empower businesses to stay ahead of evolving standards. Our CCAS team, CCAS is climate change and sustainability services, are at the forefront of helping organizations transition towards low carbon economy, develop their ESG strategies, and other critical things they need to secure sustainable future for the industry. We've got our business and technology consulting teams, which are equipped to drive transformation through digital innovation, risk management, cybersecurity, which are all essential components of an increasingly complex and interconnected world. Our tax professionals provide comprehensive advice and compliance solutions, ensuring that your business not only meets fiscal responsibility, but also capitalizes on opportunities for strategic tax planning and help to manage your tax risk. I mean, this area cannot be overemphasized in the context of the increased tax and regulatory scrutiny we see in the business environment today. Our strategy and transactions experts are dedicated to guiding companies through the complexities of mergers, acquisitions, capital raise, business valuation, business modeling, due diligence, and ensuring strategic decisions are informed, value-driven, and aligned with long-term objectives. In today's workshop, we will engage in critical discussions. There will be exchange of ideas, and there will be forging of partnerships that will help all of us try to address some of these pertinent issues. As we navigate through the findings of this report, let us consider the opportunities for growth and improvement. Our goal is to emerge with actionable ideas and strategies that will help us overcome the obstacles, and unlock the full potential of venture capital and private equity in Ghana. I'm confident that the collective expertise and the passion that is present in this room will set the stage for a future where the industry is not only thriving, but also driving sustainable and equitable development for our businesses and for the country as a whole. Thank you and a warm welcome once again to our beautiful office. I look forward to a fruitful and an engaging workshop with all of you today. Thank you.
Thank you very much, Emmanuel, for the welcome address. So we will now receive opening remarks from Ama Latte, CEO of Impact Investing Ghana. But before she comes, I just want to read a brief profile. Ama Latte is the CEO of Impact Investing Ghana, the Ghana National Advisory Board for Impact Investing, and a member of the Global Steering Group for Impact Investing. IIGH is a platform representing all stakeholders to redirect significant capital flows towards social environmental impact in Ghana, bringing together leaders from the world of finance, business, government, social organizations, and philanthropy. IIGH is executing an ambitious plan to catalyze $1 billion in impact funds for investments in impact ventures in Ghana and the West Africa sub-region. Ama is also the board chair of Social Enterprise Ghana, the association for organizations in the social enterprise sector in Ghana, and a board member of Reach for Change Ghana, a venture philanthropic enabling organization in Ghana, Ethiopia, and Senegal to launch and grow. Ama is an accredited trainer for the SDG Impact Standards, a fellow of the Africa Leadership Initiative West Africa, and a member of the Aspen Global Leadership Network. Ladies and gentlemen, let's welcome the CEO of Impact Investing Ghana, Ama Latte.
Thank you, Alice, and thank you to the whole ENY team for welcoming us to your beautiful office and for hosting this dissemination workshop. It's such a pleasure to be here this morning and to be talking about the growth of venture capital and private equity in Ghana. And this is because private funds account for almost 50% of capital allocated to impact investing globally. And in Ghana, about 33% of capital allocated to what we would consider impact, or 33% of capital allocated to really innovative financing is done through private funds. So private funds are very important places for innovation and for impact. And so we're very delighted to have partnered with the GVCA and EY with GVCA to conduct the research and with EY to disseminate it. Impact Investing Ghana does three things. We do research to identify areas for action, research to identify both opportunities and gaps. And then we do workshops like this, capacity building. We put together collaboratives to take some of the research findings and to turn them into action. So we don't stop at data. We want to see that data bring transformation. And then thirdly, we do initiatives that unlock capital at scale. So for example, We've partnered with many of the organizations in this room in a group called the Pensions Industry Collaborative to explore how we could unlock pension funding in Ghana for the real economy. And that has resulted in a number of initiatives, including capacity building for individual trustees, including the design of a fund of funds that is de-risked, that is blended with philanthropic capital to unlock pension funding for venture funds that will be investing in SMEs that will be driving the SDGs. We also partnered with our colleagues in Nigeria to create a platform, Deal Source Africa, that provides pipeline to venture funds like many in the room, as well as limited partners, a pipeline of limited partners to funds in the West Africa sub-region that are looking to close. And all these were gaps that came out of research that has been done. So we're excited to be at this workshop, not only to explore some of the recommendations from the research reports, but also to explore together with everyone action that we can take to take some of those opportunities and make them a reality, to fill in some of those gaps and to move our venture capital industry to become the catalyst for growth and for impact that we need in West Africa. Because the biggest impact area that we're working on is delivering jobs to the many young Ghanaians that are looking for jobs. And we know that SMEs provide the bulk of jobs in Ghana. So being able to grow many of our small companies to become medium and many of our medium companies to become large and to transform the landscape of our economy to deliver sustainable jobs is really important. So we're excited to be here and to be able to partner. We look forward to the presentation and also to the discussion, and we wish you all a very fruitful dissemination workshop. Thank you.
Shall we put our hands together again for Amma for the opening remarks? Thank you very much. So, a bit of housekeeping. If you can help turn off your phones, that would be greatly appreciated. Send feedback. Shrooms, if you go out to your left, and gents are there. So, So thank you very much, Amma, for the opening remarks. We will also take remarks from Matthew Bwadi Ejay, who is the chair for Ghana Venture Capital and Private Equity. But before he comes, I'll just want to read a brief profile. Then we can zoom in. Matthew is the founder and CEO of Oasis Capital Ghana Limited, a private equity fund management firm based in Ghana and Cote d'Ivoire, focusing on SMEs in West Africa. He has more than 20 years investment banking experience, 16 of which has been spent in venture capital and private equity in Africa. Prior to establishing Oasis Capital Ghana in 2010, Matthew was the country director of Growfin, a Pan-African SME development and finance company that has operations in 8 countries in Africa. He was also a member of the investment committee of Growfin Africa, a $170 million SME fund based in Mauritius, and reviewed transactions from several countries across Africa. Matthew holds a BSc in banking and finance from the University of Ghana and an MBA from University of Leicester, de Montfort University. Ladies and gentlemen, let's welcome the board chair of the Ghana Venture Capital and Private Equity Association and CEO of Oasis Capital, Matthew Bwadi Ejay.
Thank you. Just a slight correction. It's Matthew Bwadi Ejay. I think Ghanaians like Bwadi because there was a member of the coup, revolutionary coup that was called Captain Ejay Bwadi. Right, so that makes me popular somehow. Distinguished guests, esteemed stakeholders, valued partners, good morning. It is an honor to welcome you all to this crucial dissemination meeting where we present the baseline report, the state of venture capital and private equity in Ghana. This gathering marks a pivotal moment for the Ghana Venture Capital Association, GVCA, and the broader investment community as we collectively explore findings, insight that will shape the future of venture capital and private equity practice in the country. Today's presentation serves not only as an opportunity to share critical data and analysis contained within this report, but also as a platform to engage meaningful dialogue, exchange ideas, and forge stronger partnership that will drive sustained growth and development in Ghana. As an association championing the interests and advancement of venture capital and private equity, GVCA is committed to fostering a robust investment ecosystem that supports innovation, entrepreneurship, and economic development. With your permission, I would like to highlight a few investment key points. Alignment with SDG. Our ecosystem investments are well aligned with the SDG, focusing on poverty alleviation, economic growth, and industry innovation. This alignment reflects the ecosystem commitment to not only financial returns, but also creating positive social impacts. While we have made strides in sectors like renewable energy under SDG 13, it is evident that more needs to be done. Investment in life below water, 14, SDG 14, and peace, justice, and strong institution, SDG 16, remain minimal, presenting opportunities for future investment strategies. Our ecosystem portfolio companies are significant employers, with women constituting 89% of the workforce. However, there is a notable gap in gender diversity within the management roles. Although we are not doing bad in Ghana, it still remains about 61% of these positions. Addressing this imbalance is critical to fostering inclusive growth. The report identifies several challenges, including the lack of diversification within and across sectors, exposure to exchange rate volatility, over-ambitious projections, and the risks associated with performance and scaling. To mitigate this risk, we must develop a more strategic approach to diversification, improve risk management practice, governance, and realistic growth targets. Recommendations include leveraging emerging opportunities such as promoting fund investment by growing pension funds assets and enhancing financing of the blue economy, and more also by working collaboratively with impact investors as the investment that we make in the SME sector help develop our economy, and by extension, help our economic growth. As we reflect on these insights, it is imperative that as stakeholders, we take decisive actions to address the gaps and leverage the opportunities identified in the report. Our commitment to sustainable growth and inclusive development guides our investment strategy, ensuring that we are not only achieving financial success, but also contributing to the broader development of our goals and our nation. Today's meeting is a testament to the power of collaboration and partnership. As limited partners, general partners, investors, stakeholders collaborate, our effort and share the vision are driving forces behind the progress we seek. Let us use this platform to strengthen our partnership, foster innovation, and work towards a more resilient and prosperous venture capital and private equity ecosystem. I would like to just mention a few things about what GVCA does. Our role is to help the development of the private equity ecosystem, collaborate with regulators like SEC so that we can have significant growth, licensing, speedy action for what we do. Also to collaborate with advisory firm and assurance entity as they pin down in trying to get accurate reporting and numbers. As you are aware, SME poses a big risk for everybody, and particularly so as we move towards managing pension funds money. Anytime we mention that PE is beginning to get pension funds money, I always get a bit worried, and also I'm happy because a lot of AUM is coming, but I also get worried because it means that we need to up our game. Because you know what Angel Kabonu and his co will deal with you if you begin to get some things wrong. I mean, so the power of people's pension, and especially at that age, becomes very important thing for us. So we are very much aware of that, and we will work assiduously to ensure we achieve success in that regard. I would like to express my gratitude to all those who contributed in many ways to this report, and also to EY for taking the task to disseminate it. Let's continue to work together and to build a successful private equity ecosystem as we all contribute to the development of our dear nation called Republic of Ghana. Thank you.
Thank you very much, Mr. Chairman. So Hannah is sharing copies of the reports, for the, I think the first line, is sharing hard copies. We have the soft copies that we share with everybody. Online audience, we will share with you as well so that you can follow and review as we go along. We want to take some few minutes to take a group picture, then we can go into the presentation, because some of the participants need to leave for other programs. So we want to take a quick group picture. So if we can get the panelists, the first, Emmanuel, Percival, if you can please help us take a group, Matthew, Amma, yes, please, all of you. We take the group picture on the podium. Yeah, okay. Thank you very much. And for our online audience, we are grateful for your time. We had to take a short break to take a picture. So the next session, we will take a presentation on the baseline report. And to lead the presentation for us today is Julius. So Julius is the Senior Research and Policy Officer at Impact Investing Ghana. He is also the Secretariat Lead for the Ghana Research and Industry Collaborative, set to bridge the gap between research and industry. He is passionate about leveraging data to drive and inform key policy decisions. Ladies and gentlemen, a warm welcome to Julius as he takes us through the presentation. Can we give him a round of applause as he mounts the screen? Thank you very much.
Good morning, everyone. Oh, hello, good morning. Good morning. I hope you enjoyed your sleep this last night. Yeah, and please don't let the weather have a drain on you. So we'll go through the presentation, and I hope you'll find it interesting. And to follow through the remarks by the chair of the Ghana Venture Capital and Private Equity, he made mention of the need for collaboration, which is key to drive and build the ecosystem to be more resilient and also prosperous. And so on that score, I would start the presentation. So this will be the outline of the presentation. One, to focus on the background and the context of the report. Then two, look at how the venture capital and also private equity ecosystem has evolved. Then three, we will look at the role of the pension funds and the rise of funds of funds. Then we move into the deal and exit activities. And then also from the presentation or the remarks of the chair, he made mention of the VCP and then the SDGs, which are some of the outcomes of the VCP. Then we also look at the VCP-backed employment, diversity, and the distribution, which is one of the key issues that Impact Investing Ghana is actually working on with its collaborating partners. Then we try to wrap up with the ecosystem challenges, which I know most of you are aware of. Look at the issues of the failed investments and then also the lessons learned. And then we explore the recommendations that are in the report, and from there we would have the panel discussions to learn more from them and see how we could execute these actions. Okay. So this is the background. So this report, one, is a collaboration between the Ghana Venture Capital and Private Equity Association and also the Impact Investing Ghana. And this report came about based on the gap that we identified. One, we noticed that apart from the research done by the World Bank, which was on the states of Ghana's private equity and venture capital, there's been no research done that allows for further engagement. Then the second gap that we found is that based on the reports that was done by Impact Investing Ghana, on the catalytic report, we find that one, there is limited understanding of the ecosystem, the VCP ecosystem, and two, there are data deficiencies, and also funds don't understand the space. And then the third leg of this report was that issues of this gender lens investing, and then they need to have more in-depth understanding of the role of VCP was also lacking. So to put all this together, the team from Impact Investing Ghana, through the JVCA and also the research team, work hand in hand to ensure that we actually come up with a report that one resonates with the stakeholders, and so it's a more of a bottom-up approach where we identify the gaps that this really matter, and then we work at it. And so basically, this research report, one, tries to provide there's a current and also historic perspective of the VCP investments, and also try to analyze this in their performance, and then also look at the impact investing outcomes, especially in the areas of gender equality and also mainstreaming, and also partly the XD, the SD. And then the last but not the least are on the challenges. So why this report? Basically, as mentioned by Matthew and then also Amma, we want to ensure that all stakeholders have the insights to be able to take informed policy decisions, and then also to unlock capital critical for the growth of SMEs. And so without SMEs having access to the finance, we as a country will be failing. And so the goal is that we want to ensure that we accelerate the understanding of the asset class, and then we are also to catalyze impact investing, and also gender lens investing, and also the pension asset investing. So these are the critical things that we would want to do via this research. So we move to how the Ghana's venture capital and private equity landscape has evolved over the years. So straight from 1992, where the Ghana Venture the Capital Fund was established. This was done through through the support of the Commonwealth Development Corporation and also the USAID, that led to the establishment of that fund, and which is a 10-year fund at 6 million this value. Then from there we come to 1999, which saw the second funding, but this is more of a local initiative by Fidelity Bank or Fidelity Discount House, but also this had the support of other international partners, which include the FMO and the others. And if you look at the year 2004, that's where the venture capital trust fund was capitalized by a 25% levy from the National Reconstruction Levy, which allows for the VCTF to move into action. And then from there, between 2006 to 2009, the VCTF seeds 5 local funds, and Oasis Capital is one of them, who is currently in existence. And so we move into 2011. We had a Ghana Angel Investment this network, which was launched by the VCTF with 1 million Ghana cedis. And then the goal is to be able to develop an active formal angel investment network. Though it was established, it could not fulfill its mandate, and so in 2014 it ended. Thankfully, Impact Investing Ghana has taken it on board to ensure that it works hand in hand to, for it to become the apex body for angel investing in Ghana. And then we come to 2018, where the regulator issued the guidelines to ensure that what is right or what is needed in the VCP ecosystem is done. And in 2019, we had the first climate and also green venture capital fund, which allows for first loss capital. And this was provided by the World Bank. And then in 2021, the GVCA was tasked to serve as the mouthpiece of the ecosystem. We also saw the establishment of the Development Bank Ghana, and then between 2022, the World Bank recapitalizes the VCTF with $40 million. And then in 2023, last year, the Chikabak Fund of Funds was established, and this is the first of its kind in Ghana by the private sector. And then we also had the Generic Capital also being the first local gender lens investing launched in Ghana. So from this highlight, or from this landscape that we've seen, we know that we've made progress, and each year or each phase builds the needed blocks that allows us to make impact in there. So we could see that, one, based on the data right from 2008 up to 2023, there's been a marked growth in terms of the fund management companies and then also funds. If you look specifically, fund management companies have increased by 11-fold, whilst funds have increased by nearly 9-fold. And these are stories that we should be excited about, that the VCP space is having the needed visibility to attract these companies in there. And then on average, the fund management companies have 2 funds that are investing in Ghana. So we come to the asset under management from 2008 to 2023. We saw that it's been able to $6.93 billion, and so that tells you how we have progressed from 2008 up to the year 2019. It's all below $5 billion, but from 2019 upwards, we are doing in excess of $5.9 billion of asset under management. And if you look at the distribution, there's a greater part of them are coming from regional Africa funds. Then there's followed by West Africa funds. That is 20%, and then the 2.4 are from the local funds. And if you look at the report, we see that over 95% of the venture capital, private equity funding that are available to SMEs are in foreign currency, and there are only 5 local active currencies, which are Meripa Capital, Injaro Ghana Venture Capital, Industrial Support Fund. Then we have the Growth Investment Partners, and then the Wangara Green Ventures. From all of these, it's the Growth Investment Funds partners that have the highest funds available. So we come to the sources of capital, and I'm sure this is not new, but then we should be able to document and then be able to track how we are making progress over there. So largely, the development finance institutions contribute this 90% of all this committed capital. Then this is also followed by the fund of funds, that stands at 4%, and then we have the foundations and then the other. But one thing that we need to know, that the venture capital trust fund is actually anchoring these local funds with $29 million, and these are spread over 11 funds since its creation in the year 2004. And we also find that for family offices and also other sources are the smallest contributions to the venture capital and private equity investment in Ghana. So let's just move on to the role of pension funds and also the rise of funds of funds. From the data, we would see that there's been a marked growth, as I made mention earlier. So from 2012, the basic national social security scheme as asset grew from this in 3.9 billion up to 12.1 billion. But the key thing is that it is until 2017 that the privately managed pension schemes outpaced that of the BNSSS, telling us that private funds are moving into these sectors, and it's something that's critical that we have to look at. This same graph, if you transpose in terms of the currency to the dollars, we would see that from 20 to 21, there is a decline over this. That should tell you the exchange these losses that we have. And so this brings to mind that we need to ensure that we have a stable macro environment, else the progress that we are making as a country could be lost on exchange losses. So we come to pension funds investment in the VCPE, and so in 2016 the Securities in the Industry Act was passed to allow the SEC basically regulate the operations of these private funds in Ghana. And more importantly, the Pensions Industry Collaborative also came together because there are issues in there, but to address them at the individual level was a bit difficult. And so Impact Invest in Ghana took upon itself to identify all these major stakeholders in there to understand what are the issues in there and how do we work to ensure that we are able to attract capital within the needed environment. And so the task is to be able to stimulate discussions and also increase pension investment into alternative assets. Then also, we've seen that given that the domestic debt exchange program, one thing I learned at the university is that governments, treasuries are basically risk-free. But now we know that this is not risk-free, and so the case for us to explore alternative assets can't be overemphasized. And then we also have the Chigaba Fund of Funds, which is basically this a local currency blended this fund of funds that was launched in the year 2023. So basically, if you look at the constraints, one, there are limited understanding of the VCP space. Also, the issue of high returns on government securities makes it a bit difficult for pension funds to move in there. And then there is also the perceived limited track record of the general partners. And so before they come to you, they would want to see your track record. And then there's also the aspect of the inadequate institutional grade investment options. And then there's this part, this which are mainly human, this in behavior. And so some of them would have irrational expectations. And then also there's a lack of the disaggregation of the VCP from the other alternative assets. So if you look at the NPPRA reports, even though they make mention of the assets, which covers about 24% of the annual capital needs of SMEs. So at least, yeah, we are making progress, but there is more to be done. And then we see that this majority of these fund of funds offer technical assistance, and with only two of them being dedicated to gender lens investing. Now, if you move to the investment commitment that was just reported in the baseline, we find out that it actually ranged from $1 million to $10 million. Then it reached about 7 million in between 2016 and 2023. From the data, we find that no fund of funds are dedicated to green or blue financing, but then they mostly have strong climate considerations. And then some of the concerns with the delayed capital calls are higher fees, and then also carry leakages. So what has been the story so far? We have this 19 public and also private fund of funds investing in Africa, and out of that, there's 12 of them back funds that invest in Ghana, and we only have 2 funds that are domiciled in Ghana, which is the VCTF, and also the Chigaba Fund of Funds, which is currently fundraising. We also have the deal sizes that range between $2 million and also 20 million, and then the fees also range between 1% and 2%, and all these are aimed at challenging investments into African SMEs. There is also the part that as we work to close the gap, that there is the need to have more fund of funds working to ensure that the financing gap of SMEs that are estimated at 4.8 are addressed. So let's move on to the catalytic role of the fund of funds. One thing that we find and which we know is that, first of all, fund of funds play there's a catalytic roles, one by accepting flexible terms, because if there are no catalytic capital, the impact that we expect in certain critical areas may not be achieved, and they also provide there's a credit enhancement, and then they offer pledges and or guarantees. We find that the VCTF has supported 11 local funds with $29 million in this first loss capital, which also include technical assistance. We also find that the government of Ghana through InnoHub has provided $1.5 million in first loss capital to Wangara Green Ventures in 2019. And we also find that this MasterCard Africa Growth Fund also invests in this local funds, and they are this is focusing on the gender lens investing. They're also helping fund the managers to build track the records to be able to innovate and also scale up and this leverage additional investment. So let's move on to the deal and exit activities. And over there was some key issues that came, and I would share them briefly. So we find that between 2009 to 2023, the research team were able to track this 154 VCP deals, and then out of that, 116 had disclosed transaction value. So here, even though we have this 116, which is good, 75%, there's work to be done to ensure that as we work in the ecosystem, we make data available to ensure that we're able to analyze and ensure improvement. And then in there, we find that more than half, so 59%, were private equity deals, and then the total PE and investment amounted to $841 million, with private equity being the largest. So if you look at the graph, you would see that the year 2020, the year 2021, and then also the year 2022 had the highest total PE and also venture capital investment. But one key thing that you should note is that in the year, from the year 2018, 2019 to 2020, you notice that venture capital this started to outpace that of private equity from 2019 to 2020 to 2021, 20 to 2022. And so there is something that would have to see what accounts for that and why that doesn't matter. Then if you come to the average annual this VCP deal, basically the median for the total is 8 if you look at the total. But then in terms of the median, the volumes, we are doing this 7, and then for the PE it's 5, and then also for the VC investment it's also 5. So there are no significant differences in there. Now we come to this volume and also value of the VC and PE deals in Ghana between the year 2009 and also 2023. One thing that we need to appreciate is that there will be there's fluctuations, one at the global level or regional level or the national level, but this in a way do not indicate that there is stability or there is instability within the ecosystem. So 2017 had the highest deal value nearing $200 million with about 9 volumes, but this then the decline and then also started to peak again from 2020 to 2022. Now, if you check this value of the VCP deals, we would see that private equity has seen steady growth from 2009 to 2017, where it recorded this $192 million. But then from that time, it also started to drop, and we see marked improvement in the space of the venture capital that recorded $137.3 million. So here, we know that there are 68 PE deals that was used to come about this graph, and we find that even though the venture capital funds haven't done well, they started doing well from 2019, which we actually saw in the previous slide. Now we move on to the deal activity, and this analysis is based from 2009 to 2023. Here, only 3 private investment and public equity transactions were tracked, and these had nearly 224 million. And so these are cumulative figures between the year 2009 to 2023. And then the same also goes for the growth stage. But here they actually recorded this 56 volumes. And then if you look at the value of the deals in terms of the stage and also size, most of the VC deals went into the early stage, then also followed by the late stage, which is quite expected. Now we come into the sectors in which VCP deals are done, and if you check, this majority of them are in the financials, then also followed by the healthcare, and then we move on to the ICT. So these are the top 3 sectors that receive VCP deals. But one thing that we also need to find is that in terms of the financials, we see that the year 2014 to 2018 saw much of the investment for the financials from the VCP deals. Now, if you come to the this value, we would see that in terms of the financials, these are mostly attributed to the private equity funds and in the. But if you move into the healthcare, it's this largely by the venture capital funds, and then also same for ICT. And so these are critical areas, and then most especially in the this renewable and energy, they are largely this venture capital funds. So let's talk about the exit activity. The research team were able to gather 51 exit this data points, and from there they were able to find on average 2 per year. Then also this nearly all exits are private equity backed, and these are growth stage companies which I made mention of, and these occurred between 2019 and also 2023. One key thing is that 4 out of every 10 exits were of the financial sector portfolio, and then the others were in the education and also real sector. And then these they mostly exit this through this strategic buyer, and then also this buyback by company. So here we could see that for financials, then the education sector and also real sector are the main sectors that saw the exit activities happening over there. So let's come to the VCP and also the SDGs, which is one of the outcomes of this report. One, the main talk is that fund management companies are aligned with the SDGs. One, because it's part of their impact goals, and then one, there's also the rising interest of LPs. And so this is one key thing that we are excited about. We also found that nearly 99% of the fund management companies don't have an explicit theory of change. And so if you want to track how you are contributing to the SDGs, it becomes difficult. And this also explains why they are able to share data with us. And so maybe at the panel discussions, these are key issues that we need to discuss. One, how we ensure that we build the needed data metrics for funds to be able to document, such that when it comes for impact reporting, it becomes very easy for them. So the main issues that they face is that, one, they lack the awareness of a standard measure, which basically is the SDG impact standard. And I'm glad that Amma is here so she can share more light on the issues that we are facing. Now, there's also the concerns about the additional cost of measurement. Then also, some find that for us to provide the data, it's a bit burdensome, because the framework that should be there to track them right from the onset, then they can work their theory of change. It's not there. So when you go to them to ask for data, it's a bit cumbersome. And then some also find it difficult to correctly determine how impact should be attributed to the SDGs, which then implies that they are either overestimated or they are underestimated. So if you look at the SDGs, you would find that goal 17 and goal 1 received all the deal volumes from the VCPE, but most importantly, there are 5 main goals that saw much allocation. So one includes poverty alleviation, the partnership for goals. We also have the decent work and economic growth. Then we also have the reduced inequalities. And then the last but not the least is the industry, innovation, and infrastructure. But one thing that we find is that there are limited direct investment in goal 14, which is life and there's a life below water. And this is very important because we get fish from the sea, we get other meats. And so if we do not pay attention over there, this could impact this livelihoods. And then also on goal 16, we find that it's also received no investment in the, and this is something that we should take, given that we want to pursue due diligence. We also want to combat fraud and other issues that come. But it's also exciting to see that goal 13, which is the climate consideration, quite received $51.6 million over there, but this is below the targets that we have as a country to achieve our nationally determined contributions. Now we look at the disaggregation between this VC and PE investment to the SDGs. You would find that largely the PE investments are into decent work. They are also into industry, innovation, and infrastructure. There is also the reduced inequalities, then responsible consumption. But the same also goes for this venture capital. So over here, we find that the asset classes do not differ in terms of the deals that that take based on their contributions to the SDGs. Now we come to the VCP-backed employment and also distribution. Here we find that the VCP-backed businesses employed there's a 44,000 full-time equivalent workers, and these account for 99% of the jobs that were created and also sustained. We also find that about 66% of them were new. One key thing that the research team highlighted was the need to differentiate between sustained jobs and also new jobs. This is important because you would want to ensure that people are not made worse off by your investment. And so, for instance, if we only took into account only this, as we've been able to create for 44,000 jobs, we need to be able to break it down that how many of the jobs were maintained, how many of the jobs were preserved, and in addition to that, how many new jobs, and which is something that we can advocate to the Ministry of Employment and this labor relations, that when they want to measure job creation, they need to articulate how many jobs have been maintained so far and how many new jobs have been made, so that we are able to demonstrate the impact that we are making. Then we also move into the employment distribution by gender, and here you'll find that this largely more women were employed than men. So 24,000 of them were this female, and then 20,000 were men. And then if you look at the age cohort, these are largely adults, and so we'll need to discuss or find ways in which we can actually address the part of the youth that is about 13.7%. And so basically the earnings from these jobs were accounted or provided livelihood to about there's 176,000 members. So this includes there's a household, and they employ, or each the household has about 4 members. And so with the jobs that have been created, we know that we are supporting at least 4 members per household. And then if you look at the sectors that employed these people, this largely they are in the industrials, and then also followed by the financial and insurance activities, and then also the ICT. So the discussion will be that if we want to uptake employment of our this youth in the, we need to find ways and means that we help these SMEs to scale and also to improve on their businesses. Then here we also come to the representation of women in the VCP workforce. So here we find that in terms of the board, the men are more than the women, so 66%. And then in terms of the senior this management roles, it's also the same figure. Then if you come to the investment commitment committee members, there you would find that there are less women over there. This majority of them are men, and then if you come to the investment teams, also 60% of them are men. But if you look just to compare this within Africa and then also this UK, we are actually doing well, as in 36% of these women employed are in the senior management roles. And this is something that we are excited about. But to come into the nitty-gritties, there needs to be these strategies that needs to ensure that we have the right women there to add their value to the discussions. So the top 2 constraints that the research team found was that, one, there are small number of viable pipeline and also women-focused companies, because they are not in the tech back or high growth companies. And then also there is the mismatch in the energy and also commitment levels of the LPs and also the GPs to foster gender-led investing. And so we would want to see how we can work hand in hand to ensure that there are greater representation of women on the boards. And so the issues that mostly came up are this. So the chart shows the top three. Now we move on to the to go further to understand why there are few women in there. One is that there's a lack of information. Two is that there's a lack of visibility, and then also there is insufficient representation. Now the other thing that we find is that why the gender-led investing isn't happening as much as we expect is that these women, this focus business tend to be micro or small sized, and so funds will not venture into that space. Then also the sectors in which these women and entrepreneurs operate in themselves limit the funding that they need to get, and then also that there are limited different programs that are aimed to build the capacity of women in them. Now, on the aspect of the mismatch, it's they clearly this stems out of the policy that is not there to ensure that the LPs and then also the GGPs are working hand in hand to ensure that women are represented on management boards. And then there's also the weak oversight and also accountability issues, and then also there's a focus on there's a returns over impact. And so these are the issues that we have found. So now let's move on to the ecosystem challenges, field investments, and also lessons learned. From here, the main issue that we find is that the lack of limited partnership structure is a key issue that all the respondents did mention of. Now, if you come to the hurdles, one is that there is the difficulty of exits. Now, the other aspect is also building a pipeline of your suitable investments. The third aspect has to do with the licensing regime or regulatory regime, which some express that is very cumbersome. And then also the issue of the high returns from government securities. And so these are the hurdles that we identify, and we need to find ways that we can work hand in hand to address this to ensure that we are able to unlock more funding within the space. And there is a quote from one of the legal service providers. It says that we haven't seen anyone who has been able to get approval within 5 months. The process often extends beyond a year. They request a multitude of the documents, which makes it impractical to submit everything within the initial 3-month period. And so I'm actually happy that Dissemination is here and they can respond to this issue and see how we can make progress, right? Then we also move to the field investments. Here, this research team found out that issues that these respondents made were enabling factors or conditions, but they used the root and analysis to be able to come up with the lessons learned. So one issue has to do with the poor due diligence. The second has to do with the weak corporate governance. The third has to do with the forest risk, and then also trying to scale prematurely. So one is that inadequate due diligence leads to failure. Then also the point is that you want to have a board of the directors with titles isn't enough. So it must go beyond titles, and then this anyone that is on the board must add value. Then the third is that there is if you want to attract funding, then you need to have a strong value proposition, and then you to be able to articulate that to your potential customer. And then there's also the need to diversify investment portfolio management risk. This part has to do with government and how they doesn't have to ensure that the macro environment is well stable. Currently, the dollar to this year CD is going 16 CDs, and there are indications that it may go further higher, and so we will need to work hand in hand to ensure that we stabilize the Ghana CD. Then also the unrealistic financial and impact projections could also affect the expectations for investment to fail, and then also working around the issues about profit and impact. And so how do I manage my returns such that I'm also making impact? So this requires skilled and also committed people, and I'm sure Impact Invest in Ghana and AMA and us and anyone here could also help build capacity of the fund management companies to be able to navigate the issues behind profit and also impact. So let's move on to the recommendations. So the story is that as a country, we've been able to make progress in the venture capital private equity landscape. We've seen the various impact we've made. One, through the funds that we've received. Two, also the regulations that have come, and then also the private initiatives like the Chigaba Fund of Funds, then the pensions in the district collaborative that seeks to ensure that all the ecosystem players understand the space and then be able to work. So what we are recommending based on the research is that one, there is a need to institutionalize an annual study. So this baseline report, this mustn't end. There's also the need for focus studies, which one I did mention of the job creation. So so if you look at the health sector, the financial sector, there's a need to understand the contribution that they are making in terms of sustained jobs and also new jobs that they are creating. The aspect on the gender lens investing is also key, and so together with the JVCA, there is a need to have an action that ensures that funds doesn't have gender lens investing framework in there. Then also on the regulatory side, there's a need to ensure that we streamline and also remove bottlenecks. And then also there's a need to increase awareness on the alternate asset class, which is important. But also the chairman made mention that if pensions are moving into alternate assets and people don't understand the risk in there, it could pose a challenge. And so there's a need to ensure that people understand, or players in the ecosystem and understand alternative assets, and then be able to catalyze this capital markets. Then we also need to have intentional efforts to ensure that there are large pool of local investment professionals in there, because as we do our work, we also need to ensure that the next generation are well equipped to take over us. And then we also need to build capacity, also willingness to be able to collect and also report impact outcomes. So this ensures that right from the onset, maybe at this dissemination, we could resolve that we need to have that standard metrics for every fund manager to report, such that when we come for you for data collection, it does become easier. Then there's also the need to explore the multiplier effect of the VCP investment and their impact, one, on the suppliers of the VCP-backed businesses, also looking at the standards of households, of workers of backed businesses, also looking at the effect of the VCP investment on the GDP, and then also in terms of the climate consideration, the issues of carbon savings and also generation. So on that note, I would want to thank you very much for your understanding, and these are the team that helped us. So this is Uncle Steve, I'm sure many of you know him. And then also this is the Charles, the co-principal investigator, and then also the team that supported with the research work, and Hannah, and also Matthew, and Amalati. Thank you very much.
Thank you so much, Julius, for that insightful presentation. We want to take a short break before, the panel discussion. We know some people are very, hard stop at certain times, but we'll be very, we can even start the panel, and then once that person, shares his thoughts, we can ask that he takes lead of us, because we have very senior people, very busy men, and we really appreciate men and women. So we will take 10 minutes exactly. We'll be back. So snacks are served, tea, drinks. Please have, have some. Let's be back in 10 minutes exactly. We will set up for the panel discussion. Yeah. So thank you very much. Online audience, we'll be back in 10 minutes for the panel conversation. So please grab a cup of tea whilst we also do same here. Thank you. Drives industry conversation on responsible investing, valuation, and alternative investment. Ladies and gentlemen, Mr. Kwabena, Dr. Kwabena Boama. Our next panelist, Matthew Boadu Eji. He is the CEO of Oasis Capital and the board chair of the Ghana Venture Capital Association. We introduced him when he was giving the chairman address. So in the interest of time, we will ask Mr. Chairman to join us. He also has extensive experience, over 20 years industry, pace setter when it comes to private equity investment in Ghana. Matthew really rides high. Our final panelist is Mauli Ababio. He has over 35 years experience in project finance, venture capital, and private equity, gained from working with international institutions such as BN Paribas, African Development Bank, Commonwealth Development Corporation, now British International Investment. He was CDC's first African venture manager and successfully invested CDC's first VC country fund in several profitable SMEs in Ghana. After additional investment banking and consulting experience, Mauli between 2007 and 2011 served as the managing director of the African Venture Capital Association, gaining valuable insights and creating an enviable network into an evolving VCPE industry in Africa. Mauli has degrees in economics, politics, philosophy, international business from United Kingdom, among others. He is fluent in both English and French. He is a recipient of French National Order of Merit. That's the second highest national order in French. Ladies and gentlemen, can we clap for Mauli, Managing Partner, Resurgence Capital Advisors. We are very privileged to have all of you on board today. So we will quickly go through the discussion, the conversation from Julius's presentation of the report. A lot of issues came to the fore. So we will just zoom in. We will start with the regulator, we will start with SEC, to kick off the conversation. So ecosystem challenges and lessons learned from failed investment. From Julius's report, he made mention of due diligence, and I'm a transactions person, so when I hear due diligence, I become excited. So how can we add value through due diligence? So learn from failed investments. How can stakeholders, including government and private sector players, collaborate to address these challenges and also foster a more resilient venture capital private equity ecosystem. So that will go to Madam Mariam.
Hello. Yes.
Yeah.
Hello. Is it on?
Hello, can you please check your mic for us?
Try to see. Okay.
Okay, so thank you very much. I must say that this is a very insightful report, and I'm particularly pleased with how it has brought to fore the pivotal role of regulation in the private equity venture capital space. I just wish to highlight, I remember that contrary to the notion held by some persons that since the investors in this space are sophisticated or accredited investors, there is no need for SEC to regulate the space. So looking at this report, it has exonerated the position of SEC to regulate the space. If we look at the root causes and enabling conditions that led to the failure of the investments that are listed in the report, you can see that we have poor due diligence, we have weak corporate governance, we have fraud, we have financial impropriety, we have fund diversion and misrepresentations. Now, these are matters that can be traced to the quality of the board and management team of these private equity funds, as well as the IC, that is the investment committees of the funds. And it really underscores the need for a robust licensing framework and also the need for continuous monitoring of these schemes. I'm not really saying that having a robust licensing framework can really eradicate the root cause of these problems. Okay, but what I'm saying is that it can substantially curb these issues. When you come to the SEC for a license, before we issue the license, we ask you to give us the profile of the fund. So we're looking at who the directors of the funds are. We also look at the management team that you have. So we look at their profiles. Do they have the requisite educational background and expertise? Are they people of integrity? So we take them through what we call the fit and proper assessment. Okay. And I mean, you can really say that once someone has gone through that and has received the approval, the tendency that you are going to be faced with some of these fraud, misrepresentations and fund diversion will be reduced. Apart from that, we also look at we do risk-based, evaluation of the application. So we take into consideration the risks that are associated with the operation of these PEVC funds. So we are talking about investor protection. We are talking about illiquidity risk. So we look at whether you have really put in place exit strategies. Okay, then we look at your corporate governance structure. And once we are satisfied with all these things, we proceed to give you the license. I'm sure you agree with me that all these things are very, very important.
Yes.
As far as the process is concerned. Normally, once you have put together the documents and you come to us, the process kicks in. So I was really surprised when I read this statement about cumbersome licensing processes. I can say, as a matter of fact, that there are people, maybe they won't tell you, who have been able to get their license in 4 weeks. Because because when they brought their pack, everything was there. Okay. And let me tell you for a fact, don't listen to the lawyers that you go to, because their job is to read the law and then try to put together the documents on your behalf. But there is that gap because they are not finance professionals, so they don't really understand the space. So most of the time, the documents they bring us are not complete. So there is a lot of back and forth, and that takes a lot of time. Asking someone, for instance, to let the directors fill what we call the directed personal note can take 3 months. The directors don't want to fill that information, but those same directors are willing to fill extensive forms to sit on boards of banks. But when they come to our space, they are not willing to do that. Okay.
All right. Thank you, Madam Marian. I think I'll come back to you. I think it's an area we can delve, further.
So let me just say quickly that because of this, when I was coming, I came with a checklist.
Yeah.
So that you can have a look at the items on the list and tell
Yes.
whether they are reasonable or not. And so I'm going to throw this back to you. I think that just pay attention to what I'm saying. When you go to the legal professionals, just let them know. Once the documents are not complete and you bring them to SEC, there's going to be a lot of back and forth, okay, before you eventually get your license. I'm sure I'll be very happy if one or two, because I know people who are here who can attest to what I'm saying, that they really got their license on time because they had all their documents
ready. Okay. All right. Thank you very much. Can we put our hands together? We will come back.
6 weeks.
Okay, so we have 6 weeks, 4 weeks average. So that's good. So we'll come back to you. We'll quickly walk through the high-level criteria, but we just want to go around a bit, and then we come back to you again. So given the evolution of the venture capital private equity outlined in the report, what are the key milestones that have shaped the current landscape? So I think this one, Percival and Kwabena can share thoughts on it. And then we also look at what future trends we are seeing. So looking at the evolution, what are the key milestones that has really shaped this landscape for us?
Thank you very much. Just a quick correction. Sure. Please, I no longer sit on GACS. Okay. I used to be a member of the board of GACS.
Right.
I'm no longer there, so I know that this one will go out there. I don't want anybody.
All right. So he's a former board member of GACS.
I'm a former board member.
All right.
Yeah.
Thank you for that.
Key milestones. Well, before I even speak, let me just congratulate the team who put the report together. I think it's a fantastic report. Fantastic. And I was when we had
a good break, place to clap.
Yeah. when we had the break, I was talking to my senior, Mauli, that look how far we've come.
Yes.
From when I joined the industry way back in 2010. Mauli had been there several years before me, and he was guiding us through. But there was pretty much nothing. GVCA had been around, and they had invested in a couple of companies. Whenever you take Voltic, anybody who takes it, so when you talk about milestones, whenever you take Voltic, remember that it is a product of venture capital initiative. That was the first venture capital that Mauli was managing. And so that started it. And somewhere along the line, I think it's important I bring this in.
Sure.
As an economy, we didn't have venture capital, private equity. It was not on the radar. We were used to government interventions one way or the other. Government will put money here as, for example, support for SMEs or the banks. I think we had EDIF at that point where it was the government was giving money to the banks for the banks to support SMEs. It hadn't come to the radar until 2004 when policymakers decided that for once, let's get our heads together. Let's come up with a law that will seed a fund of funds that will push the idea of venture capital and private equity in the country. This was 2004. That gave birth to the Venture Capital Trust Fund Act. 2006, they started their first investment. They seeded 5 fund managers, young fund managers, each of them domiciled in Ghana. That was the first start. And then following on from there, of course, it is starting. So many people still didn't understand, still didn't know what was going on. Some of the LPs that joined, SNIT was one of them. Ghana Commercial Bank was, SIC was in there, but the learnings and the understanding was still hazy. Now, fast forward 2010, we get Oasis starting a new fund. We invested in it. And we always knew that not all the fund managers we start with will be here today. Yeah. So if anybody is looking at this baseline report and thinking, well, you know, I think I saw a comment that the growth has been modest. For somebody who has been in this for more than 14 years, yes, I can accept modest, but you must understand where we came from. Zero. And within an ever-evolving economy with challenges, and even today, it's been more challenging. I think when they picked up the exchange rate issue, it's a major issue for fund managers. And I think maybe my co-panelists might pick it up on that. So from that 2010 on and through a period, I think for venture capital, there was a little period of, I say, low investment where because it's government funding, government wasn't bringing a lot of money for us to fund, seed more fund managers. But as soon as in 2020, as soon as the government, through the World Bank, pumped in $40 million, the activity started again. And venture capital started investing and now has new fund managers, about 11 of them, with Oasis raising its third fund that we are in there. So that's exciting. I think one of the key milestones I would also like to share, and maybe then I would then leave it for Kobna. I remember when we started, we went on a journey looking at the pension funds. At the time, we haven't even started Act 788 or 766, the new pension reforms that brought in the 3-tier pension scheme at the time. The whole idea was that some of those monies will now be targeting private equity venture capital investments that is for economic development, economic growth. You know, SMEs need long-term money. This loan, 25%, 30%, first of all, they can't even compete within their own economy and then compete within West African region where other companies are getting low interest rates to pursue long-term growth. And so it was quite important that we look at that sector. Then we started knocking the doors of the pension funds regulator. I remember we had a seminar in African region somewhere in 2011, 2012, trying to lobby them to open up the asset class so that their pension funds can look at private equity at a time. I remember some of the famous words, oh, it's too opaque, oh, it's too risky, oh, we don't understand it, and so on and so forth. Now, fast forward several years down the line, we see pension funds coming in strongly. And Matthew is right in saying that when pension funds are coming in, it will have to make sure that we set up. Yeah. Well, in the past, we may have been comfortable with what we were doing. Now we can't be comfortable anymore because once pension funds come in, it's people's blood, sweat, and tears. Yeah. That's money. That expectations are coming, and these are high financial expectations, return expectations that are coming, and we need to make sure the story is right. The numbers we are seeing here is an industry supporting 44,000 jobs. Yeah. That's not small jobs. And 100 and something thousand livelihoods. So it means that we can't fail. Yeah. And if the pension fund starts coming in, it makes it even more imperative for us to be able to be successful. So those are I think one of the key things for me is when the pension fund started committing to the industry. Right. I think it lends credence to what we've been doing over the past. We've had some pitfalls here and there, but that was expected. And I think for the future, from venture capital's perspective, of course, the government didn't really intend to stay in it for a long time. It was to seed it, to support it, to grow, and at some point, to let the private sector lead. And so when I see the report, I see that this report was private sector led. Yeah. The Ghana Venture Capital Association has been formed. Impact investing is working. I believe we are getting close to the point where the private sector can claim this thing and say, this is for us, and we are moving ahead. And I can see that will happen. And thanks to DDE, now more money will come
it's available. Okay, fantastic.
Thank you.
So thank you very much, Festival, for that. So we'll take some thoughts from Kwabena, then we'll come to Matthew, who will also share his thoughts around, pension funds, DDP, and how we can continue to grow the sector.
Thank you. I think the report highlights a phenomenal growth in pension assets from 2012 through to 2022. And much more significantly, in 2024, we're talking about 70 billion cedis in pension assets. And interestingly, in 2016, where he referred to Tier 2 and Tier 3 overtaking SNIT, which is Tier 1, in that same year was when Matthew and Oasis was talking to Sims about investing in the private equity space. And the presence of local players, I believe, alongside the growth of pension assets, have been significant milestones in driving investment into the space. It took us a while to understand the story around PE investing and then also commit ourselves into it. But if you look at the availability of cash as at then, and the only option available was Government of Ghana securities, it made sense to do some tries into other areas. And thankfully, Oasis was there to lead us on that journey. So that growth and presence of a local players in the market, I believe, has been one of the milestones that has contributed in this journey.
Right. Thank you very much, Governor. So, yes. So, Matthew, in the light of the report's finding on the role of pension funds and emergence of fund of funds, what strategies should institutional investors adapt to maximize returns, while supporting SDG rules? And also, what strategies should fund managers, put in place to be attractive to the pension funds? Because you realize that some of the risk factors they indicated, due diligence, governance, and all that, of these investee companies that the funds you raise, you eventually invest in. So what are your thoughts around some of these, pension funds being?
Thank you very much. I think one of the key points that may not have been mentioned is the regulation. The context is that when the pension fund was the pension sector went into the 3-tier regime. At the initial stage, just as it will happen in many jurisdictions, there was inertia. People are afraid giving the money to private people. Our money is safe in the hands of government. I think through lobbying and also persistence, we were able to get some reform to the initial regulation. And then I think subsequently another one came on board. And I must commend SEC that even as at the time, the regulation was not concluded, but they still gave permission for us to conclude, which under what they will call the sandbox system, to have private sector get its first private pension in 2017 of not just a small figure, but about $5 million equivalent at the time. And bringing it to today, I think the DDP also has now also concluded the debate that there is nothing like risk-free anywhere on planet Earth. Maybe on Jupiter it does, because I haven't been there before. Because the truth is that there were several historical cases of government having defaulted, yet Ghanaians, asset allocators, pensioners, private people, banks, everybody believe that government is risk-free. Yeah. Even for a government that is known, Ghana is known historically to have been a government that has defaulted on debt internationally several times. As a government that is known to suffer a lot more from her judgment debt, which means government does not respect agreement. Somebody that doesn't respect your agreement, you believe that they will respect your money. That's fine. But bringing it to us as also private people is that SME is a rare risk venture, but there also lies in the opportunity and the growth. The story on the continent has been that investing in PE has turned out some good returns in aggregate, in total. So it is something that will go through some learning. But it's becoming more interesting for us in terms of the strategy to adopt to ensure that we focus more on growth sector, so that in the midst of that, we will be able to secure sustainable return and not to be overly ambitious with typical venture capital thing as would happen in other matured markets. But even if you look at those mature markets, it is mainly driven by foundations, family offices who have that historical experience. So in our journey, the strategy is gearing more towards growth, where there is an established record, you can project and predict how that would go. And I think the next layer will be for the pension fund allocators to also begin to see secondaries, because in SME, the journey is about 30 years. It is Ghana, when we're young, we all build business plan for 5 years, and it's for a good reason. Right. But success of business, he mentioned Vortic, right? Yeah. Vortic in its first 5 years may not have achieved the success. We would have even been considered not too impressive. But over time, they get to the journey that they want to. Yeah. Right. So if we don't take a long-term view and we just all go on a short-term journey, we may not necessarily meet our objectives. So we need to create different layers and tiers within that. Maybe Jerry picks it to a level that meet his return expectation. Kwabena or Yao takes over, right, from there and take it to another level. Another person takes it over. So you would see that one portfolio may have gone through different layers, because some of the funds are big, some are small. So we should not be afraid to take on transactions that have been done by some other people in their journey to getting to that level, because sometimes the 5 year is not enough for them to reach a level where they will be sustainable on their own, but they need to be taken over by others. And more crucially, in our environment where interest rate is very high, it makes it very difficult for you to leverage, to go into leverage financing and all of that. So I think series of secondary transactions would also help us to develop to the level. And of course, our stock market is also coming up. Although for several years it has not grown. I think now reaching 70 billion and potentially going into 200 billion in not too distant future would help us to have a lot more capacity to go into the stock exchange to help us achieve the goals that we want to.
Sure. Thank you very much, Matthew. So this question will go to Mauli, flowing from your concluding remarks around exits. So what trends are we seeing in deal and exit activities within the Ghanaian venture capital and private equity space? And what strategies can be adapted to maximize successful exits so that it's attractive for pension funds, for other investors, to put in money, to knowing that, when it
fairer even to look at companies that have failed. The failed investments. So looked at it from probably 2010 when this whole industry started to take root to now, as against the previous period. I mean, yes, of course, you have companies like Voltic, but at the time the circumstances were very, very different. And I just also wanted to add that, in fact, SNIT played a pivotal role at the time in 91, 92, because it was the anchor investor together with a number of local banks. So contrary to what people say, SNIT has been around trying to do this for some time without limited success. So that's very important. I just wanted to highlight that. And then just to mention a couple of anecdotal matters, because, as I said, being a sage, I've seen it, been there, done a lot of things. I think two things. First of all, there's been a sort of a maturing of entrepreneurs also within the system, and 20, 25 years ago, a lot of the people you find today did not exist. So again, looking at reasons for failure and so on, start to fall into place and to get a better understanding. I think also over time, we've had regulators, not talking about the SEC, but regulators in other fields who've displayed rather capricious behavior. So sometimes when there are transactions that have been done, they've tended to fall and fail because of the changes in the regulators' approach. And I talk, for example, of the NCA, which is for one of my businesses that I got involved in. But to come to your question about exits, I think everything, I like to add on to what Matthew said about secondaries and so on. And I think it is important that as GPs, eventually we work closely together so that we can achieve that type of alignment. But everything revolves around the macroeconomy. And if the macroeconomy is booming, exits become a lot easier, without a doubt. You know, the other comment I wanted to make was that in all of this discussion, nobody has mentioned life companies, but life companies are also key to providing long-term funding to the SME sector. And I think it's something that we have to look at going forward, because in my fund, the last fund I managed, for example, and this was not even in Ghana, but in the Côte d'Ivoire, I had 3 life companies that put money into the space, you know. So the regulation around life companies getting into this space is also crucial, and I think we need to think about that. But to answer your question squarely, really everything hovers around the way in which the economy is evolving, and if there's possibility and liquidity within the economy, exits become a lot easier.
Yeah, fantastic. Thank you very much for that response. In the interest of time, we will just go around for your concluding thoughts, you know, around, you know, the general discussions on the reports, you know, way forward, what we see. So we will just go around, take comments, then we can round up. I think Percival wants to start. Okay.
Thank you. So, I want to maybe use my concluding remarks to paint a little picture of what we are trying to do at Venture Capital to address some of the issues that were raised. Yeah. One of them being the Limited Partnership Act. I think that anybody, and I think SEC was a little bit harsh on the lawyers, but you have to allow the lawyers a little bit space. Lawyers understand when you write a law how it's supposed to be implemented. Of course, because of the training, you have a lot of arguments between them, but at least they have their client's interest in mind. One of the issues with the Limited Partnership Act is when you put it together with the practice of venture capital, it's very, very difficult. And I think it was highlighted there. What we are trying to do as venture capital is to come up with the Limited Partnership Act. Already 2 years ago, we did a stakeholder consultation. That's already been done. Right now, as we speak, we are in the process of engaging a consultant to start the roadmap for getting that act out. And so it is something that's been, the funds have been allocated for it already. I think one of the World Bank things that we designed into the World Bank project we're doing right now. So hopefully, I'm not making any promises because this thing takes quite a while, but we have done a lot in terms of this limited partnership to resolve that challenge. Yeah. And so maybe in the next 2 years, we should have a Limited Partnership Act that will resolve that challenge of domiciliation of funds in Ghana and the ancillary problems that come with it when you use the limited liability company. I won't go deeper into it, but I think everybody here who's a fund manager must have been confronted with that challenge one way or the other. The second is also the industry skill set. I think one of them was that we need to start grooming the next generation of industry professionals. That is true. It is good having come to this far. We still have fund managers who started with us and are here now. They have lessons, they have key things that they can share. But going forward, what is the future? Yeah. And so we are putting together what we call the Fund Manager Development Program. It is a program that is to train the next generation of fund managers. We already have ongoing the Venture Capital Accelerated Program, or the VCAP, which is for analyst program for the young analysts who want to enter the industry. Many fund managers here would know that if they have to hire somebody to come and work for them, person cannot start from day one and hit the ground running because the understanding is simply not there. So we are training those that skills as well, so that they can. We've done the first 10 cohorts. Now we are doing the second 10 cohort. The Fund Manager Development Program will also be coming on board. By September, we would start. We are targeting about 15 persons per cohort, so that's 30. And so in future, in the next 5 years, some of these people, hopefully, should be the next generation fund managers that will then be targeting the local pension funds and so on and so forth. I think going forward also, we want to see, and we are advocating for that as well, that not just the pension funds, I think Marley said something about that, but the other long-term funds, especially the life funds, and the regulations that prevent them from doing that. We are in talks with some of these regulators to ensure that we can remove some of these impediments. I think if we got some success with MPRA, hopefully in future we might get some success with the NIC, and hopefully we should be able to increase the amount of money that goes to funding a private equity and venture capital in Ghana. What I was saying in concluding is that the amount of money that's required, I saw 6-point-something billion a year annually for SME funding. When we did the institutional review that was done by Boston Consulting Group, I think that figure was considerably high. Something in the region of about 15 billion funding required by companies in this country for us to be able to reach a certain level where we can call ourselves growing. That's 15 billion, and we are only at 6-point-something billion. We are nowhere near. So it is something that we need to increase, and I think in future that thing can be done with a collective effort. Thank you very much.
Thank you very much, Percival. Please, Maoli want to speak.
Yeah. I just wanted to add on to what you were saying, Percival, with regard to efforts being made to deepen the industry. And I think we have to bear in mind the fact that given where we are as an economy, perhaps we should be looking also toward permanent vehicles, you see, because does the model GPLP 80-20 model actually work? And will it continue to work? Or do we need, in any event, we have LPs who are long-term. Should we not probably be looking at, sort of permanent vehicles which are permanently raising capital and then distributing results to the LPs that are involved in it? I think it's something that we need to think about, because that's how you really create an enhanced environment. It's just my tuppence worth.
Thank you very much for that input.
Okay, so thank you very much. Yeah, I just want to add to the topic of the structure that we have now and the difficulty that the funds have returning investors' capital to them. So I think we at the SCC have also been supporting the move towards coming up with this new Limited Partnership Act. I think that will make it easier, for the funds to exit. And I also think that it is also going to solve the issue of the exchange rate risk. Okay, because once we get that in, and then we also add capacity building for the MPRA, they will feel more comfortable to, invest in this local private equity funds. Okay, and so if they are able to get the funding in denominated in cedis, then they can also do their portfolio investments in cedi, and that will reduce the pressure on the local businesses. I was very excited to hear that there's already some collaboration on capacity building being championed by the IIGH, that's the Impact Investment, Impact Capital, right?
Yeah.
Ghana, Impact Investment Ghana. Okay, because I thought that was key, because one of the key issues that were identified was the fact that the pension funds didn't seem to understand the space, and for that matter, they were reluctant in investing in the space. I was also particularly excited when Chigaba was launched, because that also provided that needed added local currency investment that I think the businesses need currently. So one thing I noticed in the report was that you didn't even talk to the regulator. So we also need capacity building. So when you are putting up your programs, include the regulator. It's also a new space for us. Yeah. So we are also learning. I think a couple of times I've had to call Matthew, because I know his expertise in the field and then try to understand how the whole thing works. Okay. So I just want to prompt you that we also need some capacity building. We need our skills to be enhanced, to be able to, evaluate the application so we can have them out quickly, and also to institute the continuous monitoring measures that are necessary to ensure that the funds operate. I'm very, very wary of the fact that our pension funds are now allowed, to invest in this fund. So it's very important. If we at the SEC don't do our work well and we allow people to enter the space, people who don't have the requisite skills and experience, then we'll be exposed to all the challenges that these previous funds faced and failed, and we don't want that to happen. So that is my last words.
Thank you very much, Dr. Marian, for that submission. So we'll take Kwabines.
Right. Let me also congratulate the team for the good report done. I believe that this will add to the work that analysts do in presenting meaningful data and information when we're talking to investors about private equity investment. I think for me, going forward, one of the key things that will be significant is building investor confidence in this asset class. And this can only be done with good success stories. Yes, there could be, or there may be some failures, but I think an overall packaging of our story in this asset class will be key in driving growth and bringing along trustees who are asset owners that we manage. Yes, the DDEP has brought up the conversation around diversification and the need to actually diversify. And we thought we were good to go, but strangely, they've gone back to treasury bills. So it's an ongoing conversation. And I think that one of the areas that we need to look at is continuous education and making good case stories. And I'm hoping that in the next report, we will also have more information about the exits, the benchmarks, multiples, IIR, which they can physically see and compare with what they see on treasury bills. Then also in the broader context about macroeconomic indicators. Way back 2012, when the government was trying to push pension funds to invest into bonds, and we resisted. It was because the returns was not good. Treasury bills were earning more than Government of Ghana bonds. Then when the macroeconomic indicators corrected, they didn't have to beg us to go into it, and they actually over-invested. So I believe that once we have the correct environment and framework, pension investors or asset owners will align and would see more capital being allocated into the space. Thank you.
Thank you very much.
Thank you. I think I will make it very snappy because I need to leave myself. Yeah, I think Kwabena has hit the nail right. It's an evolving industry, and we are all happy that we are diversifying the source of funding. So as we begin to chalk some successes, and just like my senior indicated, the context of macroeconomic condition at that time is different. Even now, we're still going through some kind of, still going through fragile environment. I was just telling somebody that we did investment that CD was 1.42. The investment is being exited where CD is 15.54. Right. So that gives you some perspective that you have to do magic if you've invested in equity in that context. And so the context of why the foreign investors are being too hard on Ghana in terms of deploying capital is that capital is universal. So if Ghana is not ready, it can go to Tanzania. Right. So we need to look at it very well that all of us are actors. Let's all participate in the general campaign in economy. Kenyans done a good job. Everybody must do. And because at the end of the day, the running of the economy and the economic performance affect business and even your own life as a middle class person. So that would be my concluding fact, that the success of industry is also a function of the economy. But we are very hopeful that we will get there.
Okay. Thank you very much, Matthew. So, Mauli, any final thoughts? Oh, you're good. All right. So thank you very much, panelists, for your time. There were online questions. The team were also answering, as we were, doing the panel discussion. So we are really grateful for your time. A lot of issues have come up, around the limited partnership, timeline for operationalization, capacity building, I'm very excited. The regulator says that they also need it. So as and when we engage in all these capacity building, it's important we bring them along. Use of long-term funds around insurance, life insurance, the regulations around that. So successes chalked with NPRA, should be also replicated with NIC. So a lot of great ideas have come up, and I'm sure the team, we've taken note. And going forward to the review, some feedback also came around matrix that the researchers should focus on, around exits, what are the multiples, what are the IRR, so that there's clear comparable. You see the rate of returns as against maybe a short-term investment, and it makes it very attractive. So we are very grateful for your time, and thanks for the expertise that you've shared with us. Thank you. A round of applause for them. And online audience, thank you. I think your questions were answered. We couldn't read all of them in the interest of time, but we will still look at it, and respond to you as we go along. Thank you very much. Thank you very much. So grateful. Well, Matthew is gone. Would have been. Please, can we take a picture at the panel? Yes, a standing picture. So if you can just, okay. The panel, no. So Percival will stand here like the men will. You should stand up. Now let me come here so that is balance.
You guys can go on the stage.
Okay, you should stand on this stage. Thank you very much for your time. We are grateful for the expertise provided, your insights in the panel discussion. So online audience, once again, we also appreciate your time. We are now at open deliberations, so we will just go in and have, quick discussions amongst ourselves as to the way forward, our commitments, and what insights we've gleaned from the report and the panel session. So I'll invite I'll invite Amma Latte, CEO, Ghana Impact Investing Ghana, to facilitate that session for us. Thank you.
Thank you very much, Alice. I know we were planning to finish by 12, so we'll jump straight in. For those of you in the audience who listened to the highlights and also heard the panel, this is an opportunity for you to share your reflections. Any reflections on the report findings, anything that resonates with your own experience, and especially looking forward about actions that can be taken to grow the space, collaborative actions. Are there any ways that you want to collaborate with others to be able to continue to grow this sector? So let's take an initial maybe raise of hands for those who want to share a contribution, reflection. I see one hand. Any others? Is that a hand up too? Okay. Is there a second microphone we can use? Great. And then for those that are online, you can put your comment in the chat, or for those moderating the sound, if we're able to take online questions, then you can raise your hand online and then we'll come to you after we take the two in the room. The two initial questions in the room. Or contributions. Yes, okay. Please go ahead. Your name, organization, and then your contribution or question.
Okay, good morning. My name is Jifan Megashi from CalBank, and we work a lot with a lot of the development finance institutions on the impacts of our lending, especially the green lending portfolio. I was just talking to Aziza about Julius's presentation, and I think what struck me a little bit was the fact that the areas in which you have the most impacts measured were probably the ones that we least expected. The bar on gender, for example, SDG 5 was very small. The bar on education was tiny. Knowing a lot of what the DFIs, who I know fund a lot of these programs, are interested in, and the level of granularity that they are interested in terms of collecting impact metrics, etc. I was a little surprised that there was so little data to be able to measure. And in talking to Julius, I think he also mentioned that, well, maybe there isn't enough actual funding going into that space. But I think it would be good for subsequent reports to maybe get a little more information around how the sectors that we all hear about, gender lens, climate impacts, are so just not measured. So it's just for the next iteration, I think, if that could go in, because it was quite a surprising finding for both of us.
Thank you. Thank you for sharing that. More granularity for future reports. I think there was a hand on the other side. So we can pass the... I think for those online, it would be good if you use the mic.
All right. Do I need to stand? No.
Not particularly, but...
So I might as well. So the first one is a methodology question. I think so that we're all on the same page. The question I asked earlier was, for the purpose of this study, how do you define venture capital and private equity? And then I assume that then that becomes a standard definition that we will use across the industry, at least when it comes to Ghana. So that's the first question. Yeah.
Great. And I think we had an answer from the research team. Private equity, they looked at investments in growing or more mature companies, companies that had moved beyond the startup phase, have a proven business model and are looking for capital to expand, restructure, or make acquisitions. So they looked at funds whose investment thesis was basically investing in such companies as PE. Then for venture capital, investments in early stage and startup companies that have high growth potential but have a meager or not established track record of profitability. So they looked at funds investing according to the investment thesis, primarily in these kinds of companies. Those were the two definitions.
Okay, interesting. So there isn't a figure threshold?
There was not a figure threshold. It was more around the stage of company that you were looking at, whether it was mature or it was early stage.
Got it. And then in terms of perhaps my contribution, I think when Matthew was on the panel, he mentioned it a number of times about collaboration, and where one fund might invest in a business and then the other one would take them out and exit them and then invest more at various levels. But one of the things that I've believed to be the case is that particularly in Ghana, it's too young of an industry for funds to be competing, and we need to do a better job of collaborating. And we don't need to reinvent the wheel there. When you look at the venture capital model, at least the traditional venture capital, as is the case particularly in the tech space, you very rarely find one fund going into a deal. In fact, it's almost like they always club together. So it's, YC is in there, Ingressive is in there, and you have 5 or 6 people on that deal. And if we took that approach, then, well, fundamentally what would end up happening is, you have 5 or 6 funds collaborating on a deal, and they can do what I call engineering the success of that business, because you can then say, okay, this business is, I don't know, a rice farming business. Who else do I know? Within our network of 5 different funds, surely we know somebody who needs rice, for example. And we can work together and collaborate to engineer the success of that business, because ultimately it benefits us all. So it was just something I wanted to throw out there to say, hey, it's something we should look at. We don't have to reinvent the wheel. The VC space is already doing it.
Great. So Third Way is open to co-invest with others. You also, Kwabena, do reach out to him.
Yeah, I just wanted to add on. Absolutely right. And certainly in my fund, for example, of the 7 businesses that we invested in, we invested each time with another PE partner, so, and it helps drive change and drive value. So you're absolutely right. And I think even beyond that, as GPs, in this environment, we ought to be sitting and speaking to each other a lot more, because there are transactions that come and you can pass on to somebody and knowing very well that you will take over the next time round and so on. So you're absolutely right. Yeah.
Excellent. So it looks like that's resonating in the room. More collaboration, more partnership. If there are no more contributions in the room, we can go online and see if there are any reflections online. So I don't see any new questions that have not been already mentioned. There were a few questions around how we can get pension funds into actual venture capital companies. That would be interesting and maybe difficult given the expertise and size of most pension funds. And then there was a question around disaggregated data on the category of investments within each industry. Okay. So there isn't a lot, but I see some more hands in the room. So, Kwabena, if we can pass the microphone back.
If there is another question, I'll just throw one out. I noticed that a lot of the discussion today from the seasoned veteran fund managers was about pension funds. And I wanted to take a pulse on their sentiment. Is it, I know they haven't given up, right? But given that 90%, as the data suggested, of funds for PE, private equity and venture capital has come from DFIs, right? And often most of the LPs are foreign LPs. Is this an attempt to move away from that to say, we're having a hard time with them, FX is a challenge, and so let's just focus on doing our own thing locally? Or it just so happened that today we were focused on talking about?
I think it's not just that, but you'll find also that as you go fundraising, even from DFIs today, unfortunately, the track record of African GPs has not been that great. So raising money has become very, very difficult, and you could spend 2 years on the road just trying to raise money. And they actually also want to test your resilience sometimes just by stretching you, And the funny thing is they will give money to, and I say this, but they'll give money to somebody who just left you when you apply for money from them, So if we have money in our environment, why don't we take it? And that's it. I mean, the challenge for me has been just dealing with the regulator, because I just think, why should I, at this level, be talking to them about things which, if I were in Mauritius, I wouldn't think twice about doing. And that's the thing.
Great. Jerry, did you want to add something to that?
I think on the point about talking more to our local PE pension funds, I think it's a bit of both. You want to diversify your sources of capital, but then there's also a sovereignty element to that initiative. We really want a situation where we have more Ghanaian capital owning the best parts of our real economy, so that the growth in that part of the economy actually benefits our own people. And for me, that's one of the things that I find very motivating. The fact that I'm taking capital that belongs to Ghanaian pensioners, putting it into good businesses, generating returns, and securing their retirement. I have a very personal story where when Injaro announced the launch of our fund, Because Petra happened to be one of our investors, my old auntie who's retired sent me a message. She says, Jerry, I just saw in the news that Petra has put money into your fund, and I feel good knowing that my nephew is helping to secure my retirement. It creates a very personal connection between yourself and the people you're serving, and it gives you a daily reminder about why you're doing what you do, and it gives you a motivation to do it even better. And the other part about the sovereignty thing is, and I have to say this with a bit of hesitation, there are a lot of initiatives that come from these DFIs, which are more priorities for the Western world, right? Things that you think about when you've already eaten and you're satisfied. And some of these things can detract from what we need to do as developing nations to develop our countries, right? So I'm not saying that we don't like gender lens, but when you look at the challenges around gender lens investing that we're facing, one of them is listed as maybe not enough females want to be in the space to start with. Yeah, I mean, when you look at and even at the same time, Ghanaian, PE fund managers have 36% women in senior positions. And then, so they are coming to preach to us about gender lens when we're already ahead of the curve. It doesn't make sense. I mean, I think we have to think more broadly about how we're developing the country to raise everybody up first. Then when our stomachs are full, then we also focus a bit more on some of these other things, like climate. How much pollution are we doing in Africa? Yet these people are going to insist on climate investments before they give us money. Yet another reason for us to focus more on raising our capital locally and using that to focus on our own priorities. My 2 cents. Thanks.
So reflections around local investors bringing local knowledge, local priorities, things that maybe align better with the clients, the businesses, the customers that are served. I saw some hands here.
So I think the discussion around local capital mobilization has taken a front row recently, even in terms in the African context as well, because there has to be skin in the game. Africans have to invest in Africa before you go out and there's also several issues of blacklisting, grey listing, and all that, which makes it difficult to access capital, for international capital. So I think a lot of countries have to take that decision to put in place the enabling environments to mobilize local capital, and that's a major discussion that's ongoing even among the international investors. They want to see local capital being mobilized, and then they follow with their investment. Another thing I want to talk about is we need to work hard on some of these benchmarks that we need to challenge ourselves. If it's LP structure, let's take very, very big strides so that we can progress. Otherwise, we'll be talking about it. We've been talking about it for a while. And so we need to start taking some big strides so that I have a lot of questions coming up. Ghana doesn't have an LP law, and it's yes, it is. Yes, Percy, it is. It's come up several times. I think in a recent study that we were working on, those questions have come up. A lot of the other partners that were consortium members in other African countries were surprised that we don't, because we gave the impression that Ghana was far ahead in some of these interventions. So we had to keep quiet when it came to LP, but I think we should really prioritize it. It's a time for us to take some big strides.
So I see Percy's hand going up. The floor is asking for big strides on improving regulation and making sure that we have a limited partnership act.
I think the person who spoke is a lawyer, and I am surprised she didn't help our audience, both the online audience and those who are here, to understand the crucial nature of this LP thing. Some of the fund managers, or many of the fund managers here, understand, but for those who don't know, the Companies Act provides a structure for you to operate in. And within that structure, you must obey the law. I think SEC said it, the law. She said ignore the lawyers, but I'm afraid you can't. You must operate within that structure. And in that structure, everything is determined for you. Annual general meeting, directors, how many you should have, you should the company, the liability, and how it is done. It tells you how the company should be born and how the company should die or should never die. You understand? Private equity sets out with the aim of the company must die one day and you must return capital. Companies Act doesn't have that principle at all. In fact, rather the contrary, it is protecting the capital within the company and it must stay in there. So at the very fundamental, the two do not go together. So it's a big issue. And then you have corporate governance issues. You must have a board. In investments, the LPs want to sit in advisory committee, the international LP. Nobody wants to take on the liability of a director. SEC now, when you want to become a director, they want to go as far back as your primary school to get your certificate as a primary school. Now you think about somebody sitting in US trying to deploy capital in Ghana, and you say that that guy should come and sit as a director and you want him to give you his primary school certificates and all those things. I mean, how does it feel? But the liability that the Companies Act itself imposes on directors, nobody would want to go there. Recently, I was having a chat with one of my fund managers, and he raised a very important issue. He says, you know what? The Companies Act says that statutory declaration, I have never been a member of a company that has in the last 5 years been insolvent. Okay? Now, think about it. If you are a fund manager, as a staff of a fund manager who has been deployed to go and sit on one of the portfolio companies as a director, and for one reason or the other, through no fault of yours, that company goes down. The Companies Act has imposed upon you the next 5 years, you cannot sit on any board. So it is a very strict regime that we are running right now. And so for those who maybe may not appreciate, this is a serious challenge. Venture capital is doing its best. We are working with SEC, we are working with ORC to ensure that the Limited Partnership Act will come on board to at least address some of these things. We hope that when it does come, it will at least unlock or remove the impediment that we see as international investors and not wanting to domicile funds here in Ghana. Sometimes the conversation can just be simply, if we can't domicile it there, then we are not even having a conversation. But if we can remove that impediment, then that is a good way to start to amplify the growth of the industry. So please, Council, respectfully, we are working on it. The timelines, I think somebody online was asking about timelines. In fact, I had expected that we will start this work before the end of July. Unfortunately, you know, government, we are working within laws, and there are procurement laws on how to secure the requisite skills to work. And so we are doing that to make sure we fall within the law. But given by end of August, we will start very actively getting that act. And we'll be doing the consultation, stakeholder consultation, meeting with SEC, ORC, and all those people to make sure that we have an act that works, that is good for Ghana. Hopefully by late, I'm giving myself by end of next year, we should be able to have this. But I know Amma doesn't like the face she gave me by end of next year. But I think I cannot say, this involves also Parliament. It involves Cabinet. So these are people you cannot control, and you don't know, you can't predict their timing. So we should factor that into consideration. But I can assure you from venture capital's point of view, we are doing the best we can to ensure that we remove that impediment. Thank you very much.
Thank you, Percy. I see two more hands up. We'll take those two hands, but we can also increase our public education to include Parliament, to include various cabinets as they evolve over the months, so that this is something that as a nation we can work together on. We'll take...
I just want to react quickly to what Percy said. I'm not saying that don't listen to the lawyers. I was referring to the comment that they made in the report. I think one lawyer was quoted, right?
Yes,
saying that you can't even find one person. So that's what I mean, that don't listen to them when they try to tell you that it's SEC. That is delaying. Yes. I mean, I'm just saying, yeah. So, I mean, I've already explained that it's not our fault. It has to do with the extent to which you submit complete documents to us. So if the lawyers are delaying, okay, they shouldn't say it is SEC. So that's what I mean by don't listen to them. Okay.
Thank you. Mauli.
Yeah, Amma, I just wanted to... Miriam, I just wanted to just something that you might tell Daniel when you go. And Jerry and I were just talking about it. And it's the fact that, you could probably conceive of some kind of as Jerry called it, a passport arrangement. If I've been licensed by the FSC in Mauritius for the last 10 years, and they do it every year, they look at my books and so on, why would I have to come and then go through a long process when you know that the FSC have been doing this for how many years? They understand the industry very well. And if they've gone through a licensing of, me, and I come to you, could you not have an arrangement which makes it a lot easier to facilitate all of this? Because it takes time, for us to. And I thought it was just a very good idea and you might want to share that with Daniel and his team when you go.
Great point. Well taken. Are there any comments from the online audience that we want to highlight? I don't see any on my feed, but we want to make sure we don't leave them out of the conversation. Any comments? No comments. So then we will take any concluding remarks from the room. I think if I'm to summarize what has been said so far, there's a lot of us wanting to focus on getting a limited partnership structure and a lot of engagement around that. So we hope that when you're called for workshops, that you all show up and you allow yourself to be interviewed. There was a call for more collaboration and more syndication and collaboration between fund managers. And I think that's something that GVCA is nodding very vigorously that will be facilitated very actively so that we can partner and have more success. There were conversations around pension funds and ensuring that this industry delivers for pension clients, and also to ensure that we have a locally governed, that the benefits from this industry are also available to Ghanaians. Those were some of the broad themes that came out of the discussion, and we look forward to continuing the discussion and to future editions of the report coming out and showing the evolution of the industry. I'll hand over to Alice. Thank you all for participating.
Thank you very much, Amma, for facilitating the open discussion session. So we've come to the end of today's workshop. I would like to take this opportunity to thank everybody. I'll quote the words of Maya Angelou. Says that be present in all things and thankful for all things. So we are very grateful for your time. You've been here since 9 and you've stayed with us. Our online audience, we are very grateful. You indulged us in the breaks, you stayed on to the very end. We want to thank you so much. So on behalf of the leadership of EY, we really appreciate this collaboration with GVCA and Impact Investing Ghana. We are so grateful. We hope that this collaboration, will grow. We hear the word collaboration echoing, throughout. So we're going to collaborate more so that we all help in developing the ecosystem. So for all the hard work for Hannah and the team, Amma and the team, the EY team that has worked, behind the scenes, we are very grateful for your time and we wish you all the best. God bless us all. Right. So I'm Alice Oseokra, Partner Strategy and Transaction, and I've been your moderator.
Thank you so much, ladies and gentlemen. We want to say thank you so much to Alice. Of course, the AMA, IIG8, GVCA, but especially the EY team. And we also want to congratulate, apart from dissemination, we're so happy to have EY championing the report for 2025. And so thank you very much with the team, with the research team and everything. Yeah. So I'm also saying this now because when EY and the research team approaches you, just so we can build on the current report, please keep your doors open. Okay. Yes. Thank you very much, Alice.
Thank you very much, Amma. Thanks, everyone. Online audience, thank you. Bye.